Good morning, everyone, and welcome to Bloomberg Price of Power special, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, Russia threatens to cut gas supplies to Europe via Nord Stream 1. The EU is drawing up plans to limit its reliance on Russian energy. U.S. gasoline prices hit a record high. The spiraling cost of filling up a tank adds further pressure on American households. Stay with Bloomberg Price of Power. Today, we speak exclusively to the chief executive of the French utility Engie, MacGregor, and the IEA executive director, Fatih Birol. Two interviews you don't want to miss. You can send in your questions on IB Plus TV Go. Now, this is the picture for the markets. There's been a lot of volatility going on over the last hour or so. If you look at European stocks, now they're really buoyed by the fact that there's a proposal on the table. It's a Bloomberg scoop that the EU will look at possibly having a big joint bond issuance to actually fund energy and defense. This is something that we haven't really seen before, certainly not for this type of event in energy and defense. It brings us back to maybe what we saw during the COVID crisis. The 10-year German bond yield, watch out for that, as it could move the natural gas futures gaining some 3.8%. We really delve into how energy can supplant, or how Europe can supplant, some of the dependence on Russia. The timeline for that, of course, is crucial. If it takes too long, then it could be pointless. And then nickel, this is an amazing story. It gained some 250% over the last couple of days, currently at 80,000. The LME had to suspend this, and this is also because they're waiting on a margin call. There's a Chinese bank embroiled, but this is actually behalf of a client. Now, Russia threatening to cut off its natural gas supplies to Europe via Nord Stream 1. The move, which would be retaliation for sanctions, could worsen energy market turmoil and drive consumer prices higher. Now, on top of that, the U.S. and its European allies are discussing a possible ban on Russia oil exports. Well, what was unthinkable 10 days ago is now not impossible. Oil prices jumping on talks of possible sanctions, with the world bracing for an inflationary shock. Well, my next guest is the chief executive of French utility Engie. She's warned that any decision to stop Russian energy imports would impact the energy supplies of France and Europe next winter. Russian gas reported to represent about 20% of Engie sales worldwide. We are delighted to be joined by MacGregor, the chief executive officer of Engie. Welcome to Bloomberg and to our special Price of Power special. Catherine, give us a sense actually of what you're planning to do with Russian oil and gas, and whether Europe can, if they turn off the taps, what does it mean for Europe?
Yeah, sure. And good morning, everybody. First of all, of course, maybe worthwhile to remind that we are strongly condemning the invasion of Ukraine, and my heartfelt support for the population that is affected. So your question is related to the dependency of Europe on their gas supply. So, Europe is depending on Russia for gas supply up to 40%. So it's a significant dependency. And of course, this dependency varies from one country to another. Some countries, actually, this dependency is very, very high. And it gives you a little bit the size of the challenge should indeed, the supply of Russia completely dry out in the coming weeks or coming months. So it is a challenge for Europe. Obviously, I don't talk too much about oil. Engie is a gas purchaser and supplier. We are not producing gas, but I'll focus on gas for the sake of the interview.
So Engie owns 9% of Nord Stream 1 pipeline. We're hearing from the Russian side that they could cut it off. How comfortable are you in still doing business with Russia right now?
Look, I mean, as on a personal front, of course, you can only be horrified with what's happening. And at the same time, as a responsible energy player, Engie has to continue to provide gas to its many, many customers, both residential and industrial, who depend on this gas from economic, absolute sound reasons. But of course, should EU decides sanctions on the gas, of course, Engie would comply in the minute.
Yeah, but so unilaterally, Engie would not join other companies in cutting all ties with Russia, as things stand.
So Engie today is not present in Ukraine, doesn't have any operation in Russia. So the reality for Engie is a little bit different. We do buy gas from Russia, and I think you've just reminded us that it was about 20% of our total gas sales and gas consumption. And at this stage, we continue to buy the gas from Russia. We are obviously thinking about continue to be there for our customers, and that is really what is driving us. And of course, again, sanctions, should sanctions be decided at the European level, of course we would comply.
Of course. What would be the consequences for gas prices if Russia were to turn off the gas supplies?
Yeah, I mean, we would probably then enter a new world. Prices which are already quite high would probably go to newest high, and markets will need to be regulated in some shape or form, both from a physical supply, but also, of course, from the price point of view. So you could expect a very, very high volatility.
High volatility? I mean, how extreme would be the price shock? And what does it mean for actually subsidies and price caps in France?
So look, the price in Europe is driven by your European market. So it's a it's a European-driven market. So the gas price is really driven by European market. And what we are anticipating, of course, is regulation to kick in ahead of such a shock, and therefore measures to be taken in anticipation. I think it's really important indeed that such a shock would be anticipated, and our expectation would be that as much as we can anticipate and moderate the volatility that would be expected in such a market, we would welcome that.
You're also one of the European companies that provided a loan to Nord Stream 2, which has now been suspended. What's the financial consequence of that for Engie?
Yeah, so as a lender, we are exposed to the credit risk on this loan, and we have, mentioned the exposure, which is up to just below 1 billion euros. And of course, the credit risk is something that potentially could materialize if indeed, the company was to be bankrupted.
Of course, we need to look at the longer-term transition. Is it at all possible to, for the European Union to actually meet their target of reducing Russia gas dependency by 80% this year?
So, of course, longer term, the case for the energy transition is stronger than ever. Energy transition is obviously a diversification of source of energy. It is also a much higher reliance on renewable energy. Renewable energy is produced domestically. It's almost infinite once installed. So the case for renewable energy is stronger than ever. And that, frankly, calls for what Engie is about, which is acceleration in renewable energy. I would also like to call your attention to the biomethane and biogas potential, because this is gas, and gas has a major role to play still in the energy transition to help stabilize and compensate the intermittency of the renewable. And for that reason, biomethane and biogas has a potential that we feel can be accelerated even in the short term. In France alone, for example, biomethane was about 6 terawatt-hours last year, and we think that can be doubled in a fairly short term, Francine. So yes, energy transition, in a way, potentially can be a strong winner from, this crisis because of the case of the renewable energies, and that includes electricity and gas.
But despite your efforts, your tremendous efforts and the tremendous efforts of Engie, your position as leader in renewables in France, France still relies, I think, about 70% for its energy needs, for example, on nuclear. So what's the right mix to accelerate that transition?
Yeah, I think France has made the choice of a balanced mix for the future. And to be honest, balance, in my mind, is the true source and secret for resiliency. The obsession that everyone needs to have is to find the right balance between low carbon, affordability, robustness, and of course, social acceptability, which, as you know, can be a challenge sometimes in our countries. And to have a diversified energy mix is, for me, clearly the secret of that resiliency, affordability, and of course availability of the energy supply. It is really, really the key. So not one technology can be the only winner. To have a diversified source of technology is important. That can include nuclear, as France has made the choice. but nuclear won't be enough. You need to have a lot more solar, you need to have wind, and of course, biogas. And this is why, it is so central to Engie strategy.
Catherine, we're also following this incredible nickel story with the LME now suspending it because of a margin call that needs to be paid back, which for the moment we haven't seen yet. This could impact a lot of the renewables. How much do you use nickel in terms of your renewable projects, and what could be the longer term impact of this?
No, I mean, I didn't quite get completely, Francine, your question, but what I can assure you is that, Engie obviously has a very strong balance sheet. We are in good shape, and we have no intention to stop continuing to invest and accelerate our development in renewables.
What does this mean?
And now
for
I get your
Engie?
question.
Yeah, it was on nickel, but I mean, it's moving so fast, and actually nickel, extending the surge, and of course the LME now suspending that. So I know things are moving extremely fast. Like, is there a danger? The broader concern, Catherine, is that actually that you don't have access to some of these materials or some of these metals that are so needed in the energy transition because of the war in Ukraine.
Yeah, look, it's sorry, I get now your question, Francine. So. Diversification of supply is going to be very, very important. And you're right to say that we're still working out through all the different components of our supply chains across different technologies. But again, from a principle standpoint, it does speak to having as much a diversification of technology, of sources of supply, both in terms of nature of supply, but also where they come from. And that's really where we're going to be driving more robustness and resiliency. And that's just going to be, I think, when time goes by and we will look at this crisis, it's going to be one of the key lessons.
Catherine, thank you so much for joining us today. The Engie Chief Executive Officer there, Catherine MacGregor, joining us with a nice roundup of exactly some of the challenges and opportunities going forward. Now let's get straight to the Bloomberg First Word News on Price of Power. Here's Leanne Gerrans. Hi, Leanne.
Hi, Francine. The European Union is set to unveil a plan to jointly issue bonds on a massive scale to finance energy and defence spending as it copes with the fallout from Russia's invasion of Ukraine. Bloomberg understands the proposal may be presented after an emergency EU summit in France at the end of this week. Upgrades to the bloc's energy infrastructure is likely to be a key part of that very plan. Now, Russia has threatened to cut natural gas supplies to Europe via the Nord Stream 1 pipeline. Energy Minister Alexander Novak warns the Kremlin has the right to take actions that mirror the penalties imposed on the Russian economy. Meanwhile, sources say the EU is mapping out proposals to cut Russian gas imports by almost 80% this year. The plans to be presented later today will include tapping new gas supplies and increasing energy efficiency, which aims to deliver independence from Russia well before 2030. And the cost of rescuing failed UK energy supplier Bulb could jump to as much as £3 billion after wholesale natural gas prices did reach fresh records. Bloomberg understands the administrator running the company is using taxpayer money and needs more funds to purchase energy for customers. The cost was initially pegged at £1.7 billion. Global news 24 hours a day on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Leanne Gerrans. This is Bloomberg. Francine.
Leanne, thank you so much. Now, up next, we'll continue the conversation on the price of power with the executive director of the IEA, Fatih Birol. Pretty crazy swings when it comes to energy and metals. You can send in your questions on IB Plus TV Go. This is Bloomberg. Economics, finance, politics. This is Bloomberg Price of Power, looking at the global energy crisis. I'm Francine Lacqua here in London. Now, the market's really on the move. A lot of support for European stocks because of this possible joint issuance of debt, a pretty hefty issuance. It's a Bloomberg scoop. It has not been approved, but it would be the EU considering this massive joint debt bond sale to actually fund energy and defense. You can see nickel, our biggest focus, when the LME halts nickel trading after unprecedented 250% spike in the natural gas futures. I have not seen a downward move for quite some time, down 2%. Now, Energy Aspects Director of Research, Amrita Sen, joined us earlier to discuss tightness in energy markets following Russia's invasion of Ukraine.
It is going to be heading higher. Obviously, it's never going to be in a straight line. Potentially, Iranian barrels could come back. U.S. is also talking to Venezuela about potentially removing some sanctions. We don't think it's quite there yet. But yes, of course, might get a few corrections on the way, but ultimately this is headed way, way higher.
So what does that mean, Amrita, in terms of what we should be looking out for? Way, way higher is what, 185? Can we reach 200? And what happens to demand then?
I mean, I would say you need at least 150, if not higher, for a material slowdown in demand growth. And I think that's the big issue we have right now. In a post-pandemic kind of recovery phase, demand is growing pretty rapidly right now. And even at these price levels, we aren't seeing any kind of significant slowdown in demand. And the other issue is a lot of countries are actually bringing back subsidies because of such high prices. So consumers aren't fully seeing these prices either.
Why is Saudi Arabia and OPEC Plus not stepping in?
I think it's a very complicated situation for them. Russia is ultimately a member of OPEC Plus. And if you think about it, I mean, this is not something, this situation hasn't been created by them. And ultimately, they also don't have a lot of spare capacity, something we've been talking about for some time. If Saudi Arabia and UAE, let's say they bring all of their spare capacity to the market right now, in the summer when demand could be even higher, what happens then? So they do have to manage this very, very carefully.
Energy Aspects founder and director of research, Amrita Sen, speaking to Bloomberg a little bit earlier. Now, for a map on the terminal, these ships have either a Russian flag or the country of operation of the ship owner, manager, technical manager, operator, or beneficial group is in Russia. I don't know whether we have it, but it's a good way of actually looking at some of the vessel search. Some of them will not actually be sanctioned, but traders find it more and more difficult to go out there and buy Russian oil. Now, a strategic release of crude announced by the IEA will see 60 million barrels of oil from member country stockpiles deployed to help compensate for missing Russian output. The move has not done much to quell oil markets, though. The price of crude has continued to rise, with some traders betting that it'll even break $200 by the end of the month. Well, joining us now to discuss all of this is Fatih Birol, Executive Director of the IEA. Fatih, thank you for joining us. It must be an absolute nightmare trying to predict the price of oil. How high can it go?
It can go higher than what we see today. It will depend on a few factors, but mainly the behavior of Russia, whether it will continue the invasion, and we don't see if we see or not a ceasefire over there, but also what kind of measures the producing countries, other oil-producing countries will take, and what kind of measures the consuming countries are ready to take. So these are three main factors: Russia's behavior, political behavior; second, producing countries, oil-producing countries' behavior, decisions; and third, consuming countries' decisions they have taken and they may be taking in the next days to come as well.
Fatih, the IEA has said its release of 16 million barrels of oil was a first step. Given the market turmoil and the market disruption has increasingly intensified over the last couple of days, would you be looking at releasing more?
Thank you. I have mentioned that this was an initial release of stocks. We are following monitoring the markets closely, consulting with our member countries, but also with other producing countries around the world. And when and if necessary, we will definitely recommend our member countries to release more stocks. I should mention to you that the amount of stocks we release as of last week was only 4% of our stock reserves. There is a lot of oil there, and it will be at the disposal of the markets in order to help to stabilize the markets. But I should tell you that I am rather disappointed with the several producing countries who did not take the necessary measures to comfort the market. Those colleagues, those countries who said they are there to stabilize the markets, we have not seen that recently, and I would say this was really disappointing from my perspective.
Yeah, why is the IEA then not pressuring Saudi Arabia more to increase production, or is that happening behind the scenes?
So we are talking with all the countries around the world. We are reminding them that if the markets, the turmoil continues, it is not in the benefit of anybody, as I see now, but it is, of course, up to them to decide. I think the previous colleague you talked with saying that there was not enough spare production capacity. This is not right. There is significant amount of spare production capacity, and one may take some of them, bring it to the markets. And I would also tell you that very soon we are going to come up with some suggestions how to reduce the oil demand in a hurry. What we can do there on the demand side, some regulatory, voluntary measures that the governments can take, the consuming countries, to reduce the demand, in addition to the possible impact of the high oil prices on the demand growth.
Fatih, can I go back to this possible second release, actually, of stockpiles, emergency stockpiles? You said this was a minimal amount compared to what you have. If Russia were to turn off the taps, would it also be a political decision to actually just put a lot of barrels out there on the market as a significance of what we could do?
Yeah. So as I said, this is only what we have released, 60 million barrels, is only 4% of our total reserves. And if we see the need, we can release substantial amount of oil to the markets. They are all on the table. We are monitoring it very closely.
Is it time for OPEC Plus to expel Russia?
I think it's up to them what they are doing, with whom they are working together. It is their decision, but what are the consequences of those decisions will be understood in the next months to come, if there are any.
Are you concerned with actual shortages in Europe's diesel market, Fatih?
I see there are already difficulties in the markets. There's a significant gap. And we are working with many governments around the world how we can narrow that gap. Increase of production from several producing countries, reduction of demand, and maybe additional stock release from the International Energy Agency.
So who has said that first of all, are you receiving any actual reports on these shortages on diesel? And who have you had conversations with that are ready to step in?
I think we talk with all the countries who are really responsible to address this, feeling responsible with this situation in the markets, who want to help, who want to solve the problem on the producing side and also on the consumers' side. And we are following the markets momentarily, to be honest with you. Yeah. And we look at how we can solve this diesel problem. But it's not the only problem. We have other challenges as well in different markets, from India to Latin America. There are several problems, and it will amplify those challenges if we are not able to bring new oil to the markets.
Fatih, thank you so much. As always, Fatih Birol, their executive director of the IEA. Oil pushing higher, of course, as the U.S. is also moving a step closer to imposing a ban on Russian crude imports. Well, that's it for the Bloomberg Price of Power. Bloomberg Surveillance Early Edition continues in the next hour with Matt Miller, Kaylee Lyons in New York, Anna Edwards in London. This is Bloomberg.